Happy anniversary, bull market. Hi, Dean Jenkins with FollowMeTrades.com, and this is the market update for the week coming up of March 4th, 2019. And I say happy anniversary because this bull market is on March 6th is going to be entering its 10th anniversary. The absolute low after the market decline started in 2007 through 8 and 9. The absolute low was put in on March 6, 2009, and the low was 666.79, and here we are up at 2,800 10 years later on the 6th. So a historic bull market, a really impressive one, but of course the question is, what happens next? Where do we go from here? Well, I absolutely wish I had a crystal ball and could predict perfectly what's going to happen next, but we don't. But we do have tools at our disposal, and we have things to watch, and we're focused on reality. So I've, as usual, assembled the things to watch for the upcoming week. And so I'll walk through these here, and we'll see what we got going on. So first, it's the 10th anniversary of a bull market. It is remarkable. It's amazing, and it's getting old, right? It's very extended, so we got to be careful. It could continue, and if it does, we'll participate, and if it turns down, we'll be ready for that as well. The question remains about global slowing. Signs out of Europe, out of China, Asia, emerging markets are of global slowing, and we got to pay attention to that. There's the rising specter of the impact of previous Fed rate hikes being felt in the economy, and are they beginning to take effect? The Fed says they're not going to raise rates anymore this year, but they've raised rates several times, and is the impact of that going to be felt and going forward? And of course, any breaking news on a China trade deal is going to be market moving and disruptive, so we're going to pay attention to that. We do have some government reports coming up this week. The focus is going to be on jobs and housing, and that could give signs and indications of the strength of the U.S. economy, so we'll be watching that closely. And in terms of earnings news, we're pretty much through earnings season. There's a few more coming up, but we're definitely on the back side of it. And so far, the analysis, according to FactSet, is the S&P 500 is projected to report the first year-over-year decline in net profit margin since 2016. Again, another sign of potential slowing that we have to pay attention to. We do have some earnings coming up Monday, CRM Salesforce, Tuesday, Kohl's, Wednesday, Abercrombie, Thursday is the stock we like to follow, Calumet, and then Friday, Big Lots. Not the only companies, but they're kind of notable, and again, earnings are slowing down. We're pretty much through the earnings season, and these are just some that we'll keep an eye on as we go forward. So I've shifted the chart here. This is the daily chart for the S&P 500. You can see it's hovering here at the 2,800-ish level. Some consolidation going on. There's some prior highs here, and we will see if it powers through this on new highs or reverses from here. For the last week, it's been kind of sideways, and the S&P did log, I believe it was a 10th straight week of gains, just barely. The Dow did not, the NASDAQ did, the Russell did. So we'll see how this all plays out. We'll trade according to the realities. This is a look at the futures markets, and I'm pointing here to the S&P 500 overnight futures here on Sunday, the 3rd of March. And there was a gap up, about 10 points, and it's holding on to those gains. So we'll see if those follow through at the market open Monday morning in the regular session. But so far, continued bullishness. So the conclusion here is, well, happy anniversary to a 10-year bull market. It's been amazing. It's been great, and we're going to see if it continues. If it does, let's participate in it. If it's going to turn down, well, then let's go short and participate in that. We're at a decision level. It's consolidating, and we just have to be aware of the events. I've covered some of the big ones coming up, and be nimble, trade according to the realities. If you try to assemble everything, rate hikes and, potential for slow global slowing, earnings and profit margins may be slowing down just a little bit. All these things, currencies and all, Brexit and, whatever. You try to factor all those things in and it just gets overwhelming. And the simple thing to do is to retreat to the reality of price action, watch what's actually happening in the markets and respond accordingly. So what we see is an impressive big run up this year after a dramatic drop at the end of last year. This run up, some slowing, some consolidation, and so we're going to watch. Does it break through? Great, we'll go long and stay long. Does it reverse? Great, we'll go short. So we just have to trade the realities, stay focused, stay disciplined, follow a trading plan, and that will serve us well, as it has year after year after year. So I wish I had a crystal ball and I could predict what's going to happen. I don't have that, but I do have, a well-performing trading system based on the reality of price action, and we can predict based on what happens then what's going to happen next with some pretty reasonable certainty, and so we'll continue to do that. As always, welcome your comments, your feedback, and your questions, and we will update things as they develop. All right, thanks. Bye.